Hello everybody, and thank you for watching the Wealth Guide Show. I'm your host, Tom White. Well, it's good to be back in stocks, that is, as we were out of the market for about 3 weeks and re-entered the stock market here just past week, and stocks surged across the board. And wait till you see what happened to the IBD 50 portfolio this week. I want to give a special thanks out to Alfonso from Colombia. Calling in, we spent some time together going over about 100 different stocks, and we tore apart the IBD 50 this week and looked at all those charts, and he learned how to grade the stocks using these methods that we're using on the show here, and he applied them to his own stocks that he was looking at and stocks he was holding to, and I think his performance is going to go a lot higher by using these strategies. So special thanks out to Alfonso. Thanks for supporting the show. We begin with our IBD 50 portfolio. And we review now our holdings going into this week. This week we had our number one performer, Hansen Natural, 22 shares of that stock, $1,717.10 in that stock. And it's Dollar Tree, the second best performer last week, 31 shares, starting the week out, $2,023.06. And it's Netflix. We had 10 shares of that stock. It was reintroduced in the portfolio. It's an original stock in the buy and hold strategy portfolio. Check out last week if you missed it. Got 10 shares of that stock, $2,569.60. And it's GT Solar. Picked up 168 shares of that stock, $2,570.40. And it's Biogen, 20 shares of that stock, starting the week out with $2,068.40. One of these stocks, the worst performer, is about to get sold. Let's see how we did. And we look now at our number one performer this week. Coming in, number one, it's GT Solar. And GT Solar started out the week at $15.30 and closed the week at $16.18. Had a total gain in the portfolio of $147.84. Let's take a look at the chart. And the daily chart of GT Solar down below, 0.1. The stochastics are in overbought territory and they're trending sideways here, but they got a downward slope to them, so we're going to issue a little caution here, give it a yellow mark. And above that, 0.2, the MACDs are still rising, but the histogram bars, they're falling a bit, so we're going to give this a yellow mark too. And up top, point number 3, the relative strength index. It's moving sideways. It's in the bullish territory though, but since it's moving sideways and it's looking like the last tick is down, we're going to give this one a yellow mark too. And our number 2 performer this week, coming in second place, it's Hansen Natural. And Hansen Natural started out the week at $78.05, and it's been on a tear. Continued this week at a close of $83.63. Got a total gain in the portfolio of $122.76. Let's take a look at the chart. And on the chart of Hansen Natural, down below, 0.1, the stochastics are in overbought territory, but the black line is over the red line, which is a positive sign, so we gave it a green mark. And above that, 0.2, the MACDs are ascending higher, so they look good, and histogram bars are rising too, so we gave this a green mark. And up top, the relative strength index, it's climbing higher, so we gave this one a green mark too. Looks good for Hansen Natural. And our number 3 performer this week, coming in third place, it's Netflix. And Netflix started out the week at $256.96, and it closed the week here at $267.99. Got a total gain in the portfolio this week of $110.30. Let's take a look at the chart. And on the daily chart of Netflix, down below, 0 0.1, the stochastics are in overbought territory, and the black line is over the red still, but it's converging in on the red sharply, which would give us a bearish signal. So we give it a yellow mark here, just a little caution. Above that, 0.2. MACDs, they gave us a confirmation of the bullish outbreak on the stochastics as the black line crossed over the red here and gave us a bullish signal, and the histogram bars crossed and they're over the zero line, and they're moving higher too, so we gave this one a green mark. Up top, 0.3, the relative strength index, it's continuing to climb higher, so we gave this one a green mark. And that only leaves room for one more stock in the portfolio. One of these stocks is going to remain, the other is going to get sold. The first stock up, it's Dollar Tree. Dollar Tree's been in the portfolio, hiding out in cash for a few weeks, and re-entered the portfolio last week, and it's battling it out against Biogen. Biogen is a new addition to the portfolio last week, battling for the fourth spot this week, coming in number 4, and remaining in the portfolio, it's Biogen. And Biogen battles out the fourth spot and had a pretty good week. Opened the week at $103.42 and closing the week at $108.50. Had a total gain to the portfolio of $101.60. Let's take a look at the chart. And on the daily chart of Biogen, down below, 0.1, the stochastics, they are in overbought territory. You can see where they started to turn over a little bit here, so we gave it a yellow mark. And 0.2, the MACDs, they're still ascending higher, but they're losing a little bit of steam on that black line, and the histogram bars dropped a bit too. They're still bullish, but they're losing some steam, so we gave it a yellow mark. Up top, 0.3, the relative strength index, same thing. It's losing a bit of steam here. It looks like it may hit a peak, but the trend is still up, so we gave it a yellow mark. And so Dollar Tree is out of here. Still performed nicely though. We started out the week at $65.26 and we closed the week at $68.23. Had a total gain of $92.07, but it made the least amount of cash this week in the portfolio, so it was bumped. Let's take a look at the chart. And on the chart of Dollar Tree, down below, 0.1, the stochastics have been riding in overbought territory for a while, so we gave it a yellow mark here. And above that, 0.2. Still have ascending MACD lines. They look good, and histogram bars, we got a bump up there too, so we gave this one a green mark. Up top, relative strength index. It's been trending sideways, and we had a little tail up here in the last couple of days, so we gave this one a green mark too. Still looks good for Dollar Tree, so it's a shame that we got to lose it, but hey, we're going to pick a better stock. And so for our final results this week, we had GT Solar coming in first place, had a total gain there of $147.84. And it's Hansen Natural back up in the top 2 again, had a gain there of $122.76. And it's Netflix coming in third place with a gain of $110.30. Biogen came in fourth place and survived the portfolio, and we had a gain there of $101.60, and Dollar Tree is out of here. Still had a gain though of $92.07, so we gotta respect that, but we're gonna pick a stronger stock, hopefully. Got some cash here of $308.56. We had a total gain this week of $574.50. It's pretty good for coming right back into the market after being in cash for 3 weeks. And so we get a new stock in the portfolio this week. And this week, our new stock, it's Bridgeport Education. And Bridgeport Education, symbol BPI, has got a market cap about $1.35 billion, average daily volume of only 575,000 shares, so be careful on that. Bridgeport Education Inc. provides post-secondary education services. It offers associates, bachelor's, master's, and doctoral programs primarily in the disciplines of business, education, psychology, social sciences, and health sciences. Hey, finally a stock I can understand what the heck they do. Let's take a look at the chart. And on the chart of BPI, it looks pretty strong down below, 0.1. The stochastics are reaching much higher. They're not quite in overbought territory, but I think they're going to be there shortly. So we gave it a green mark. And point two, the MACDs, they're about to confirm that move in the stochastics as that black line is moving up on that red. And histogram bars climb above zero too, so we give this one a green mark. And up top, relative strength index, you can see that that's climbing higher, trend is up, and it's reaching into the 70 line there, so this is bullish, and we gave this one a green mark. And so our holdings going into this week, we got GT Solar, 168 shares of that stock. And we're starting the week out with $2,718.24. And it's Hansen Natural, the second best performer this week. Got $1,839.86 there. And we've got Netflix in third place, $2,679.90. Biogen survives the portfolio, $2,170 even. Got BPI is the symbol here, Bridgepoint Educations. Picked up 31 shares of that stock, $2,122.31. See, we got cash total now of $301.32. And look at the performance we got here. We're at $11,831.63. And we started on January 28th with only $10,000. So we got a little better than 18.25% increase in our portfolio. That's pretty good during volatile times that we've had here. Now BPI, the new stock of the portfolio, Alfonso helped me pick this one out here as we went through all the stocks in the IBD 50 holdings this week. So if it doesn't work out, it's Alfonso's fault. But if it works out, it's mine. I'm just kidding. Anyway, these stocks, they've still got to perform or else they're out of here. And we review now our economic mechanics from this week. And if you've been watching the show, then you know the economic mechanics are based off of 3 key points. And it's our first point, the US dollar and commodities move in the opposite direction. And point 2, historically, commodities and interest rates, they move in the same direction. And last, point 3, high interest rates are bearish for stocks. Let's take a look at the US dollar. And on the daily chart of the US dollar, down below point 1, you see we got a stochastics reversal here on Monday as the black line crossed over the red and dropped sharply thereafter, giving us a sell signal. We gave this one a red mark as it's still falling. And above that, point 2, we got confirmation of that sell signal in the MACDs as the black line crossed over the red. And the histogram bars, they dropped below 0 and they're still falling, so we gave this one a red mark. Up top, point 3, the relative strength index been going sideways in a trend, but it's not looking great. We did give this one a yellow mark. And on the weekly chart of the US dollar, down below point 1, the stochastics, they're still bullish and reaching into overbought territory. The black line, though, dropped a little bit here, so we got a little caution and gave this one a yellow mark. Above that, point 2, the MACDs, they're still bullish and confirmed the stochastics as the black line crossed over the red, but the histogram bars fell a bit, so we gave this one a yellow mark. Up top, point 3, the relative strength index, it's still trending higher, but the last little bump there is down, so we gave this one a yellow mark. And also on point 4, you can see we got a base there, a little upward trend line. It's minor, but we're right on it this week, so we're going to take a close look at this for the coming week on the US dollar. And so summing up the US dollar, we analyzed daily charts and weekly charts. On the US dollar daily chart, we found the stochastics and MACDs were negative and they were falling this week, so we gave these red marks. Relative strength index, though, was still neutral, so we gave this one a yellow mark. Over on the weekly charts, the stochastics, the MACDs, and the relative strength index, they were all still neutral, so we gave those yellow marks. So summing up the US dollar, we got 2 red marks, 4 yellow marks, and 0 green marks going into this week. And so we take a look now at the commodities represented by the CRB Index. And on the daily chart of the commodities, we see down below, point 1 of stochastics, got a bullish signal here, and we're moving higher, gave this one a green mark. And above that, point 2 shows we're just getting confirmation of that bullish breakout on the stochastics on the MACDs as the black line crossed over the red, and the histogram bars moved above zero and they're lifting higher, so we gave this one a green mark. Up top, point 3, relative strength index. It's up against a little resistance here and it's got a little tail down, so we gave this one a yellow mark. Over on the weekly chart though, down below, the stochastics, point 1, see where we're moving lower here as we got the sell signal and we have not turned yet on this. We are in oversold territory though, but no sign of recovery here, so we give this one a red mark. Above that, point 2, the MACDs, they're still falling, and the histogram bars, they're looking negative too, so we give this one a red mark. Above that, point 3, relative strength index, been trending downward here and it's not looking too good, so we gave this one a red mark. And so summing up the commodities, we analyzed daily charts and the weekly charts. On the daily chart, stochastics and MACDs were bullish, we gave them green marks. Relative strength index was neutral, so we gave this one a yellow mark. Over on the weekly charts though, things haven't turned yet. Stochastics and MACDs, relative strength index were all negative, gave them red marks. For a total, we got 3 red marks, 1 yellow mark, and 2 green marks for the commodities. Now you can start to see the relationship with the US dollar as the dollar is falling on the daily charts while the commodities are rising. Also, as the commodities are still falling on the weekly charts, we're starting to see the US dollar turn into neutral territory. Direct correlation here. And let's take a look now at the 10-year Treasury yield. And on the daily chart at the 10-year Treasury yield, we see that we got a bullish spike there on Monday. We got the black line crossing over the red on those stochastics on point 1. We gave this one a green mark. And above that, point 2, we got confirmation as the MACDs got a cross there as the black line crossed over the red, reaching higher. Histogram bars are rising, gave this one a green mark too. Up top, point 3, relative strength index, it's lifting higher, it's looking bullish, we gave this one a red mark. And over on the weekly charts, this is getting interesting. Down below, point 1 of stochastics, see that we're getting a bullish signal down below. Want to see this lift above the 20 line though before I give it a real bullish signal and give it a green mark. But for now, we're going to give this one a yellow mark. Above that though, point 2, the MACDs are still falling, but the histogram bars are lifting higher, so we gave this one a yellow mark. Up top, relative strength index bounced sharply, so we gave this one a green mark. And summing up 10-year Treasury yield, analyzed daily charts and the weekly charts. On the daily chart, found the stochastics, the MACDs, and relative strength index were all bullish, and we gave them green marks. Over on the weekly chart, stochastics and MACDs were neutral, so we gave those yellow marks, but the relative strength index was positive and bullish, so we gave that a green mark. For a total, we got 0 red marks and 2 yellow marks and 4 green marks. It means Treasuries are moving high, the interest rates are moving higher, which means the prices are declining. So that's not good for the Treasuries, and it's real bad for interest rates, as interest rates look like they're moving higher. And we take a look now at the Dow Jones Industrial Average. And on the daily chart of the Dow Jones Industrial Average, down below point 1, the stochastics, they're in overbought territory that's still bullish. We got that little hook again on that black line. Been seeing that on a lot of things this week. Gave it a yellow mark. Above that, point 2, we see that we still have confirmation as the MACDs are moving higher and the histogram bars are lifting higher too, so we gave this one a green mark. Up top, relative strength index still looks good. It's climbing higher, so we gave this one a green mark. Over on the weekly charts, since we're going to watch this one closely, is down below point 1, the stochastics look like they want to give us a bullish signal here, and that would be a major breakout here, so we're going to watch that. We gave it a yellow mark, as we're going to watch this week and see if we can get that cross. Above that, point 2, MACDs, they're still negative, but we see improvement as the black line is starting to flatten out a bit. And the histogram bars, they're returning to the 0 line, not quite there yet. Gave this one a yellow mark. Up top, relative strength index, we see a bounce there too, so we gave this one a yellow mark. And summing up the Dow Jones Industrial Average, we analyzed the daily charts and weekly chart. On the daily chart, stochastics were neutral, so we gave them a yellow mark. On the MACDs and relative strength index, though, we found they were bullish, so we gave them a green mark. On the weekly chart, stochastics, the MACDs, and relative strength index were all neutral, so we gave them yellow marks. For a total, we got 0 red marks, 4 yellow marks, and 2 green marks for Dow Jones. Things are looking better here. It's getting interesting. And so we've been coming up with scores for the US dollar, the commodities, 10-year Treasury yield, and Dow Jones, looking for where the strengths are and where the weaknesses lie. We've been doing this by analyzing the number of positives and weighing them against the number of negatives and coming to a conclusion that way. And in first place this week, it was the 10-year Treasury yield with 4 green marks, 2 yellow marks, and only 0 red marks. It's looking real bullish for the 10-year Treasury yield, which means it's real bearish for the 10-year Treasuries themselves as they're falling and interest rates are rising. And in second place this week, we got the Dow Jones Industrial Average. Much improvement there. We got 2 green marks, 4 yellow marks, and 0 red marks. And in third place this week, it's the Commodities. We got 2 green marks with 1 yellow mark and 3 red marks. And the US dollar is falling. We got 0 green marks, 4 yellow marks, and 2 red marks. So we see improvement in the commodities and weakness in the US dollar here. That reversal is going to be watched real closely going into this week. So we take a look now at the market gauge. The object here is to be as far in the right column in bullish territory as possible and as far away from the left column in bearish territory. This week, the 10-year Treasury yield came in first place, and that's moving higher into bullish territory. That means that the Treasury prices are falling, and it's not looking good out there for the Treasuries themselves, so you want to stay away from things like bonds going into this week. And Dow Jones Industrial Average, it's looking a bit stronger too here, waiting for confirmation on the weekly charts to look bullish, but right now it's neutral in second place. Commodities, we see some improvement on the short-term chart there, and long-term weekly charts not looking quite as good. But the daily chart had some improvement here. It's moving into neutral territory in third place, and the US dollar has been falling down in last place after having a strong month last month. Anyway, tune in again next week where we'll do it again, but for now, I'm out of here.